Moving the needle on founder failure, one conversation at a time. I'm your host, Lucas Poles, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs around the country to help you think through and overcome some of the top challenges that startups face.
I think there's no better place in the country to be investing than Los Angeles.
What is the problem that you're solving and for who? Like, what is that specific pain point?
Sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
I want to see somebody that isn't going to stop. You know, this person, you just feel like they're gonna make it work.
Today on the show, we welcome Patrick Driscoll from 500 Startups. Patrick is the Investor Education Program Manager there, which means that he teaches investors how to invest. Patrick, welcome to the show.
Thank you. Excited to be here. Thanks for the opportunity.
No, really appreciate you coming on.
Sure.
Typically where we like to start is want to find out a little bit more about 500, kind of their investment thesis, all of that kind of fun stuff. And then we'll end up diving a little bit more into you and kind of how you ended up there and kind of your background. So
sure.
Yeah, that'd be great.
Great. Well, I guess just starting off with the thesis, 500 essentially likes to invest early and invest often.
Mm-hmm.
The belief being that a large and diverse group of early stage investments will really de-risk the process and also provide maximum potential for returns on investment for the LPs and for the investors.
Mm-hmm.
And that's kind of the process. So that early and often is really important for them. And at kind of a numbers level, 500 has made well over 2,300 investments at this point.
Oh.
It's been around for 10 plus years. Yeah, it's pretty impressive.
Yeah.
I think we're at 16 unicorns and 3 IPOs.
Congratulations. That was a big deal.
Nothing bad to write home about, which is good.
Nice, awesome. Yeah. So let's dive a little bit more into you. I know that you're involved with a bunch of different programs right now, and then specifically even with what you do with 500, which is teaching the investors how to invest, which
Yes.
is a very interesting standpoint where, because most entrepreneurs don't even think that investors need to be taught how to invest. So
yeah.
Let's walk through a little bit of that. Let's walk through kind of what are some of the high level topics that you end up talking about with them.
Sure. So, well, I guess taking a step back, in addition to the fund aspect of 500, there's also a huge ecosystem development portion of 500 at its core level, at its mission.
Mm-hmm.
So globally, we've invested in over 70 countries, and because we've seen so much growth in the startup and ecosystem world in different regions around the world and the globe, we decided to kind of develop this ecosystem strategy. So 500, part of that is where I come in, where the investor education program manager.
Mm-hmm.
But we also do corporate innovation with corporates to help them really figure out how to work with startups, create CVCs, and really innovate internally. We do partnerships with governments as well. So it's kind of a multi-tiered system to get to all parts of startups and the startup ecosystem within these developing geographies and regions. So for the investor education portion, which is what I help manage, it's super exciting, and it is cool to see that 500 thought about the investor piece when they're developing an ecosystem. And with the entrepreneurs and the founders and the startups, obviously they need their technical assistance and they need to be helped in developing whatever they're trying to do, whether it be marketing, et cetera, but so do investors. And a lot of folks kind of questioned why 500 would do that. And the thought process, in my opinion, is that there's enough cake for everyone to have a piece.
Yeah.
And if we're developing strong and coherent investors in these new ecosystems in new parts of the world and new parts of the US, etc., then they can help develop startups that would then further down the process come into the 500 funnel.
Mm-hmm.
And just really building that family is huge. And because VC is such a sexy, quote unquote, industry, everyone wants to get into it and nobody really understands how to. There's a lot of imposter syndrome There's a lot of folks that want to focus in different theses or different verticals and create a thesis that's either focused in diversity or a vertical they're passionate about, whether it's med tech or maybe female founders. And that's kind of where they're coming from, but they don't know how to raise a fund, or they don't know how to operate a fund, or they don't know a due diligence process for vetting deals. And that's was part of the impetus of creating the investor education programs.
Awesome. So what are then some of the mistakes that you try to help investors avoid kind of early on?
Sure.
Probably a lot.
It's a good question. So I think part of the reason why the program was developed, the Venture Capital Unlocked specifically program, was to help new fund managers or new angel investors or new investors, new family offices, even existing ones, avoid those mistakes, because time wasted is money spent. Mm-hmm. So we really try to provide a framework through the VCU program and just to avoid those commonly made mistakes. So maybe allowing a company that's not in your thesis to pitch you, and why would you do that if you don't know anything about it, going after creating that thesis actually. Mm-hmm. A lot of new fund managers have been able to raise funds maybe if they've gotten to that point, but they don't know what to specialize in, or they don't know what vertical to look after, or they don't know the types of founders. They're just going at it agnostically, which isn't oftentimes the best way to do it. Mm-hmm. Having a systematic approach through a thesis is very useful. Yeah. And will eliminate a lot of opportunities for messing up. And that's a huge part of several of our programs, actually, developing that thesis, running it past our team, some of our partners' teams, even within the cohort of investors that come through our programs. So that's a huge piece of it. And then we get into a lot of due diligence questions that need to be answered just to de-risk your investment. We provide frameworks for cap tables and term sheets and how to really understand how those work, because people try to self-learn and it's not, or they learn through doing, which is oftentimes what you need to do in VC and entrepreneurship in general. But we can help kind of skip a few steps to get them to where they need to be to at least understand how to successfully manage these tools. Yeah. In addition to a million other things that we provide through these programs.
Awesome. Let's switch gears a little bit. I know that you're on the board of Start Out here in LA.
Yes.
Wanted to just find out more about what the program is, what it entails, what is the purpose or the driver of it, really.
Okay. My background is mostly in supporting entrepreneurs, actually, as opposed to the investor education piece, which I fell into. I guess I can talk a little bit more about that later. But when I found out about Start Out and when I decided to move to Los Angeles in November, I was living in Mexico City before this. I wanted to get involved in the LGBTQ plus ecosystem, specifically helping entrepreneurs and helping investors get connected. Just because it's something that's been a passion of mine. Even in Mexico City when I was living there, I was working to help entrepreneurs that happened to be part of the LGBTQ plus community. Mm-hmm. So when I landed in LA, I made a network of LGBTQ plus investors, former founders, current founders, startups, and reached out to them to tell them that I was moving to LA. They really kind of helped push me to get involved in Start Out. And then the opportunity arose to chair the board for Start Out in 2020, and I quickly decided that would be fantastic in terms of my own personal goals for helping LGBTQ plus entrepreneurs. Also be a great way to meet people as a new person to the city. It's something that I'm passionate about. The mission of Start Out aligns exactly with what I'm passionate about as well. So it was an easy yes.
Awesome. Oh, that's super exciting. What type of programs are they specifically running throughout the year? Do they do events? Do they do, I don't know, maybe pitch competitions? Like, how does it actually end up working?
All of the above. So Start Out is very eclectic, as the LGBTQ plus community tends to be. And there are events basically every month. And it culminates in a large demo day, most likely in the fall. Last year there was a fantastic specialized demo day focused in social impact, but outside of those two demo days, there are events. There's one at the end of this month actually focusing in the entertainment industry, how to successfully start and run a business in that industry, which makes sense here in Los Angeles.
Mm-hmm.
We try to make things specific to the geographic region where it is, because start out as a national organization. This year we're kind of driving the idea of diversifying membership, and I'm excited that we have quite a diverse board this year, and I think it's going to really allow folks that have maybe not have heard of Start Out or these types of affinity groups to get involved if they're maybe a person of color, queer person of color, or a lot of women founders and women investors. I'd love to get them more involved in Start Out. That's a huge driver this year, so we're doing a lot of events surrounding diversity in the entrepreneurship space and how to help support folks outside of whatever you might associate with. And so that's super exciting. We do mixers. We're looking to get more into doing things like hikes and stuff as well, just to build the community. And yeah, the idea is to build the community and to support the community and make sure the community is successful and empowered.
Is one of the main drivers trying to connect, is to kind of, I know that funding is very much can be a challenge, right?
A little bit, yeah.
So is that kind of one of the main drivers, is trying to make sure that not necessarily that they 100%, well, obviously that they get funded, but giving them at least getting them exposure to the right people to actually do the funding?
Yes, absolutely. I think any good affinity group or any good even venture capital fund helps their startups, their founders, whomever's involved with them, get access to capital, because that's obviously a huge reason why a lot of companies fail. And that's the same with Start Out. There's a lot of effort to put these entrepreneurs and founders, whether it's early stage ideation or whatever, not only with mentors who are going to help them with their technical skill building, but also that access to capital, which is huge. And as a growing number in the US, there's an increased visibility of folks with a thesis, VC funds or angels or family offices interested in investing into LGBTQ plus entrepreneurs, and making sure those bridges are built and sustained and grown is very important. And even through its network, which continues to grow every year, Start Out is going to be able to make those connections outside of the LGBTQ plus community. So finding capital from existing VCs from different sources in the US, and it's been great to see, and you know, putting the right people in touch is obviously a win-win situation, and that's something that we try to do.
Awesome. No, it's really exciting and encouraging. I know that besides the prototypical white male.
What do you mean?
Yeah. For a lot of other people, it can be tough to make that hurdle jump. There are excess barriers that don't need to be there.
Yeah.
That kind of are, and so no, definitely appreciate some of the work that you're doing and trying to make that significantly easier for them. Let's dive a little bit more deeply into you. I know that you're new to LA. I know that you're enjoying the weather very much.
Mexico City wasn't terrible.
Oh, good. So, no, honestly, perfect transition. So, where you worked on a lot of these programs internationally, walk me through some of your journey and then how you even ended up at 500 itself.
That's a long story. So, I guess when I was young and bright-eyed and bushy-tailed and recent college grad, I wanted to go out and save the world. That was my mission and drive, and I wanted to go international, get involved in international development. I wanted to build windmills in Zimbabwe and all those things that normal people want to do when they grow up. And luckily, my first job after college was in international development, which really opened up my eyes to a lot of the not necessarily issues with the process of international development, but the hurdles and negative impact it can have throughout the world.
Mm-hmm.
And that kind of was the first indicator that maybe I can shift in a different direction. I ended up in grad school at the University of Denver, focused in microfinance and international finance, which was my first foray into helping entrepreneurs, since microfinance is essentially oftentimes a small very small scale loan to an entrepreneur in the developing world, or even in the United States in some regards. That brought me to Senegal and West Africa, where I was working directly with entrepreneurs for the first time, and I was doing basic things like financial literacy, personnel management, online marketing, basic marketing for ecotourism actors in Senegal, which was super interesting for about two years with the Peace Corps, the U.S. Peace Corps.
Oh, you were with the Peace Corps.
I was.
Okay.
Yeah.
It sounded everything you were talking about. I was
Very
like, it
Peace
sounds
Corps-esque.
yeah.
Yes. So that technical assistance to entrepreneurs was something I wanted to continue, and I ended up spending time in South America and Colombia, where I worked with quite a few founders, in addition to Real Madrid, where I was working with youth leadership camps. They have a foundation there, which was fantastic to work with right after the Peace Corps. And from there, I ended up in Mexico, where I worked with a few entrepreneurs as well for the first time. And then I finally got to Los Angeles for about a year right after all of those international experiences, and had the opportunity to work with a federal agency that I'm not sure that I can mention. But through context clues, it's pretty easy. That worked directly with small businesses in LA. And I was training lenders throughout the LA area, how better lending practices, the products that the government provided, and how to kind of implement them in a way that would be beneficial to the entrepreneur as much as humanly possible. And that introduced me to several public speaking events where I was able to meet a lot of accelerator programs, technical assistance, which I was passionate about anyway, based on my prior experience. I met great organizations like LACI, the Los Angeles Clean Tech Incubator, and folks like that, which were super inspiring to me. And through those accelerators and technical assistance programs, I met a lot of VCs, and that was the first time that I really met the venture capital world, and it happened in Los Angeles. And I knew at the time I wanted to transition back international. I could do short periods of time in the US. I'm in LA for good at the moment. And decided that I wanted to pursue a career directly in venture capital. Found the position with 500 in investor education, which I was already doing lender education essentially. And applied and was on a plane moving to Mexico shortly thereafter, and was very steep learning curve learning venture capital since I was about to help educate a bunch of investors. It's great if the people that are running the programs know how to do it, if they're teaching you how to do it.
Might help. Awesome. So, so you've had a lot of international experience. So let's dive into specifically Mexico. What are some of the challenges that someone from international like an international entrepreneur would face versus someone in the U.S.
for getting investment from?
Yeah, getting investment, maybe support ecosystems. I feel like you might compare it maybe to like the Valley is the Valley, right? But maybe someone in the Midwest where the ecosystem might not be as strong yet. Like, what are some of the challenges that someone maybe in Mexico City that would face versus that you might not run into in the U.S.?
Definitely, there are several challenges, and I think in the past, Mexico City, for example, and Mexico in general, have had a really good development curve in the past few years, specifically maybe the past 5 or 6, where a lot of funds have emerged, a lot of international activity has focused in Mexico City. There are a ton of entrepreneurs in Mexico City, and founders and great startups, and Latin America in general is seeing an explosion within the startup community, which is naturally bringing investors that want to get to be a part of the process. And that's been great to see, but it still isn't nearly as robust as San Francisco. Similar situations in the US, and there are language barriers. Obviously, a lot of founders are able to speak English, and I know our accelerator program in Mexico City, 500's accelerator program in Mexico City, there's a requirement for English, just because when you're approaching investors outside of the Mexican ecosystem or the Latin American ecosystem, oftentimes they're going to be from the United States. That's a huge hurdle. The access to capital is a huge hurdle. Levels of investment are lower, which makes sense based on economic indicators and just the economy in general. But there's the one thing that I'll also mention, which is huge, and I don't know why I didn't talk about this at first, is there's a huge brain drain where really talented founders and startups don't want to stay in Mexico or country X. They want to immediately go to Silicon Valley or the area where the investors are, where they can get a good team, or they could join a team. So really great, maybe coders or something won't stay. They'll try to go get a job somewhere else. So there is that kind of brain drain, which is slowing down, which is really great to see. And people are beginning to understand the potential of the region and Mexico as a country in general.
I feel like a lot of the brain drain kind of, because even LA was running into that challenge. I mean, LA graduates more engineers than anyone else in the country, which is a wild fact, right? But keeping them was the most difficult thing because everyone would just go up to the valley. I feel like as the ecosystems start to mature, that you end up getting people who end up staying and building there a lot of the time. Do you find that if the companies that go from Mexico to, say, the Valley to find people, do you see them going back to try to pay it forward? What does that transition kind of see? Because I feel like once you have an exit, if you can bring back the capital to kind of restart the programs, that helps tremendously.
Sure. I definitely have seen that. I'm not sure about any numbers to back it up, but and folks are going back to Mexico City and other parts of Mexico with large startup ecosystems at a higher level, only because the ecosystem themselves have grown to a point where it's substantial enough for success. And it is really great to see. And a lot of those folks, if they are successful, will bring either programs or coding opportunities for kids in high school or something like that, just to really help grow it at a base level and to spread the idea of entrepreneurship in the tech industry specifically. And it is happening, and there's some great programs happening in Mexico specifically. So it's occurring. I always hope that it occurs more, and I think there's amazing opportunities in Mexico personally, and would love to see those help. I would love to see those grown to their full potential.
A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out.
So, one of my favorite topics typically on the show is around due diligence, just because everyone kind of has a different take on it, and I guess all the different investors have different specific things that they end up looking for. Like me, for example, I very much love go-to-market strategy probably because I have a sales background, so it's very impactful on me. So walking an investor through kind of the process of due diligence, what are you trying to educate them on to look for? I think it's interesting to find the different dynamics from an entrepreneur standpoint to see kind of what investors look for trying to get that investment. So what are you trying to teach them?
I think the first thing that the 500 VCU programs, venture capital unlocked programs, are trying to impart is the idea of self-reflection. Know what your specialties are, know what you're knowledgeable about, and that's going to directly influence your thesis. And if you have that level of self-awareness, then the rest will kind of it won't fall into place because you have to still work, but it'll be a lot easier to allow the pieces to fall into place. And there are oftentimes investors, in my experience, that are interested in maybe the gaming industry, but they've never worked in the gaming industry. They might have grown up playing video games, but they don't really know anything about the business model. So do you really want, and that person might be coming from a medical background.
Yeah.
So why would you want to focus in the gaming industry because you're casually interested in it when you can focus in the med tech industry where you'll actually be knowledgeable and have a higher chance of knowing what a good idea is and what a good entrepreneur looks like. So that's one huge thing that we help them get through. For the due diligence process, because each investor is different, we try to provide 500 in the VC programs, try to provide an overview of how to do due diligence, and the program actually will provide a template for questions you should ask and what you need to look for, the data points that you really should strive for the founder to have ready.
Mm-hmm.
And once you've isolated and identified the key things that you as the investor are looking for, then you can proceed with further due diligence processes. So the program is designed to provide baseline tools that can then be developed and built upon within each participant in the program. So they can take the template, go forth, build on that for whatever they're actually looking for, and then they can successfully do a due diligence process. And then of course we get into the idea behind due diligence, why it needs to be done, and just the most important backbone questions that need to be asked.
It's good. I think it's good that you're educating people, because I feel like a lot of, especially just angel investors, like you always remember the first check that you wrote that you shouldn't have written, and it's generally it can be a large mistake.
Yes.
So definitely a valuable piece. What are some of the let's dive a little bit deeper into kind of some of the red flags that maybe the investor should be able to spot early on. Like, what are some of the red flags that you're conveying to them to look out for when trying to evaluate a deal? Sure.
Number one, and I think a lot of folks in the VC industry will agree, is team. And if there is, specifically with 500 at such an early stage investment, if someone isn't working on their company full-time, for example, in their startup full-time,
mm-hmm.
that's an immediate red flag.
Yeah.
And take that into consideration if you're an investor in early stage. If you're an investor that is doing an even earlier stage, maybe that's something that wouldn't shake you.
Yeah.
Additionally, teammates, how they work together. You're always striving to identify strengths and weaknesses, and hopefully they can self-identify, and how they complement one another in terms of how one person will be the face, the other person will be the back-end operator, there's a technical specialist. Understand the team dynamics really well, get to know them. If you are at a point where you want to ask follow-up questions in the due diligence process, get to know the team.
Mm-hmm.
And that's a huge part of the process, because a lot of investors think emotionally, and that's a huge part of VCs, emotion versus rational thought, because there's not so many things. You could de-risk in only so many ways.
Yeah.
So emotion goes into it, but keeping those in check. Additional red flags include, if it's your industry and your specialty, understand the market and understand the market analysis. If the founder hasn't done any sort of competitor analysis or even a SWOT analysis, then that indicates that they might not be knowledgeable enough to really go forth and be successful.
Mm-hmm.
And honestly, in the pitch, have a list of criteria that you're looking for, and if something is missing, if there's an overt piece or a lack of information about financials or forecasting or something like that, that's a huge red flag A.
Yeah.
But B, you can work with them further to tell them, come back to me in a week with all of this prepared and make it realistic, or sometimes it's completely unrealistic, and you as a specialist, luckily in that field, know so. So yeah, there are a million red flags that come up, and we try to provide a substantial list to the participants in the venture capital mock programs, but there's only so much preparation before they have to go on their own.
Yeah, I feel like that a lot of it it ends up coming down to pattern recognition of just doing it. I don't know, I looked at I think 3,000 decks last year, and I feel like once you've kind of gotten to that place where you've just seen a lot, you can look at something and be like, oh, I already know that there's a challenge here. Like, I don't even need to talk to you. I can see it within the actual deck. So,
and new investors often have this imposter syndrome, which I believe I mentioned earlier.
Yeah.
And that's something that the program tries to drive, is everyone is in the same boat, especially when they're a new fund manager or a new GP or a new associate in a fund. You're not going to know everything. You're going to have to learn, just like no one is given the gift of venture capital knowledge. you have to really strive and figure it out. And once you get to a point where you see 3,000 decks in a year, then hopefully you can build up that skill set to be able to vet them very quickly.
I think the imposter syndrome is, I find very interesting because, I mean, even a lot of the investors that I talk to, like, VC is not a great asset class, just traditionally. But I don't know, when we ended up, I remember I was at a meditation retreat in the Valley with a bunch of other VCs. Like, we're in a peer group and some big names in there actually, and we were all sitting together and we all kind of came to the conclusion that honestly none of us truly understand what we're actually doing, because we can tell you the difference between a good deal and a bad deal, but we can't tell you if a good deal is actually going to succeed or not. And so it was fascinating to find out, like name brand VCs that still felt that same imposter syndrome that really everyone else feels, because it's like, I can't tell you if they're going to 100% succeed. Like, sure. I'm making a bet, and I mean that's the way a VC fund is structured. Is you're making multiple bets, and then you're going to ride the one bet that ends up going well.
And it's always interesting to me because there are VCs with higher rates of success, and obviously those are the brand recognition is huge for those VCs, and I would consider 500 as one of a very recognizable brand in
I would too.
the venture capital world. And the reason why I think rates are so high, and with firms like that and funds like 500s and the Andreessen Horowitzes and all of those, is because the good deals or former founders that have already had exits and they know what they're doing and they know who their team is and they've de-risked in a way that makes it even slightly more likely to succeed, go to those firms for investment. And if you're struggling or new, or you're raising your first fund and are looking for LPs, you don't have that brand yet, and that's a huge part of being a new investor. And that's something that the venture capital and audit programs really talks about, and coming out with maybe content pieces via LinkedIn or Wired or any number of places where you could help build your brand so that startups and deal flow will, get in front of you at least.
Yeah, no, that's a very good point. I think the deal flow is one of the big, it's one of the big drivers on who is going to succeed and who's not having access to the good deals. Yeah. So let's switch gears a little bit and let's dive into some of the entrepreneurship stuff. So, we can talk about even some of the companies within 500 or even before. Like, what are some of the challenges very early on that they run into and that they actually end up facing?
Very early on challenges. I'll harken back to the team concept. A lot of founders who kind of came up with this idea for whatever product or service, did it with their best friend from college, and they might not be the best fit, and that could end up corrupting the entire startup in and of itself. That's huge. Obviously, access to capital, and if you are a first-time founder and you didn't come from Stanford and you didn't come from Columbia and you didn't come from all these top-tier universities with entrepreneurship or MBA programs, it's going to be a struggle for you. So identifying maybe a potential teammate that's going to help fill that gap, just to be strategic. And one thing that I do recommend specifically for early stage founders, and maybe even for folks that are in the ideation phase, are to read venture capital books so you understand from the investor standpoint what they're looking for. And that's such an easy risk mitigation strategy for you, where you'll actually be able to prepare things that you could present in your deck, for example, to a potential investor. And lack of preparedness is something that is everywhere in the startup world, and it's very apparent, and it's a huge red flag. And if you're not prepared, you're going to lose that investor. You could have the coolest product ever, but if you're unable to convey the message or what it actually means, then you're not going to ever gain traction. So understanding it or being able to look at it from the investor's perspective at your product or service or whatever it might be, I think is a really savvy way of conducting your deck or whatever your pitch might be.
I think it's interesting, the lack of preparedness. I remember John from the Books company, the flower delivery one, he used to say that you have to, if you're not pitching your startup to the person standing in line with you at the grocery store, you're not doing it right.
Yeah.
Because if you're the first person that is walking in and you're the first person that you're going to end up talking to as an investor, like, you have made a drastic mistake.
Yeah.
100%.
100%.
Yeah. Getting that story out, I feel, is very...
and first, practice in front of a mirror.
Yeah. Yeah.
Be your own critic.
Yeah.
Record yourself. Listen to it. Figure out would you invest in yourself.
Yeah.
That's a huge thing that I know that I always tell founders to do.
Mm-hmm.
And just make sure that it's good and you have all the pieces covered.
Okay, so if they avoid all the red flags, maybe they get their first, their pre-seed, their seed round kind of filled. Like, what are some of the reasons that you end up seeing startups ultimately going down?
Market fit is huge.
Mm-hmm.
And it could be just a market that's been exhausted.
Yeah.
Maybe it's such a niche product or service and you weren't able to, pivoting is also huge. Maybe you haven't been able to pivot and you haven't been able to make difficult decisions. I know sometimes founders have to cut 60% of their team after their even Series A sometimes because they didn't pivot in time, or they're in the midst of a pivot and that's the only way to save their company or their startup. And being unable to do that is going to lead to the downfall of your company.
Yeah.
And making those hard decisions, and that's a huge aspect.
I think that's super interesting though, is the pivot, like not waiting too long to make the pivot and to make those tough choices.
Sure.
Like, look, I need to cut 60% of my team. Like, this is the team that was executing on this piece. It's not going to work. We need to shift gears. Like, and just kind of being ruthless in that standpoint. It's like you were part of it for this journey, but like for us to continue and for us to survive, like we have to totally shift gears, and you can't make that shift. Like, I think that's a thing that a lot of founders might not have the heart to be able to do.
Agreed.
Yeah.
And it's kind of, the passion of the founder is always going to be there, because that's how good founders are created. They're passionate about their startup, and once they've gotten to a certain point, it's not necessarily burnout, but you might get comfortable.
Mm-hmm.
And that's another big reason why I think some companies fail, is the lack of fire that's driving them. And part of that fire is being able to make those difficult decisions. We got to cut half the workforce in order to move forward. Just being, pragmatic with all of your decisions, and making sure that you surround yourself also with mentors and teammates that are able to have your back and help bounce ideas off of. And if we do this pivot, what do we need to work on? How do we need to create a public relations campaign or something to just make sure we save face?
Yeah.
And that's also people oftentimes want to do things in isolation, especially at that stage, and you need to surround yourself with people that are going to help you, not drag you down.
No, very true. The advisory role is
huge.
Yeah, it can be very important. Just even as that sounding board to have a conversation with them to get the objective kind of viewpoint. So we talk a lot about team being one of the most important things, because ideas are a dime a dozen and they're useless. I've seen 9 of the same ideas in the last 2 months. Deck sent to me. So we place a lot of importance on teams. What are maybe some of the great aspects of the team? I know we talked a little bit about filling the gaps from the standpoint of maybe a university pedigree or something else, but what makes a great team, and then what can drive a team into chaos and failure?
Sure. I think diversity in thought is a really strong aspect of a good team.
Mm-hmm.
That being said, there needs to be an underlying mission that ties everyone together.
Mm-hmm.
So being able to wrangle the tech operator and the CEO and the public relations person and all these folks that are going to help lead and push the team to success, but making sure that they're all mission driven is very important.
Mm-hmm.
And on the same page, and filling the gaps in doing that internal self-evaluation about what I'm good at, and talking to somebody about it too, because sometimes maybe you're not the best person to have that conversation with yourself.
Yeah.
Getting there and then working with a team to fill those gaps that you might be missing if you're the founder, for example, and making sure that everything is in place and ready to go. Having hard conversations and being able to have a forum about it that's open and free is also great. Being an overbearing founder where you're not going to take anyone's opinion seriously is not the best. And yeah, so in order for a team to be successful and to drive a successful startup, there needs to just be open communication. It needs to be controlled, obviously, to a degree. And it's a team. It's not, there's no I in team was created for a reason, you know, and just filling in the gaps. And if you realize that there's another missing gap, invite somebody else or find an advisor or something like that that's going to help you get there. And self-learning is huge. Everyone should be, especially at an early stage, continuing to educate themselves in different aspects of the business, different aspects of the industry, and just be willing and able to learn from one another as well, and take criticism as constructive criticism. Be constructive in your criticisms.
Yeah.
There we go. I'll say it that way.
So then what's your kind of take on, because team is so important, what about the solo entrepreneur?
Sure.
Like what, can they be successful? If so, what is going to make them successful? Is that something the 500 considers? Like how is that viewed within the organization?
I think 500, I mean, if 500 receives so many applications for its seed program, it's inevitable that there's going to be singular founder, singular teams, meaning one person on the team. And the entire portfolio history of 500, I'm not sure actually about any sort of percentage, but from my opinion, being a singular founder, you need to be an incredibly special type of person to get to a point, even if you're at the seed level. If you get to the seed level, or even, I mean, Series A is a singularly founded company's crazy.
Yeah.
It's been done, but
that would be wild.
I'm sure it's been done. I actually can't even think of an example. And but to a point, what a firm like 500 or a lot of other VC firms, I would hope, would be, you need to bring other people on, because you can't do this all yourself. Because if you think about it, the percentage of failure is so high with just one person that it would almost be counterintuitive, unless that person is somebody who's founded 17 companies and 14 of them have exited.
Yeah. Or is a machine.
Yeah, or is an actual machine. Yeah.
Okay, awesome. As the portfolio companies in 500, maybe they go through the program, or even earlier founders, like what questions should they be asking when looking for VC funding? Like what would make it a good relationship? Because a lot of the time this is very much like a marriage, right?
Yep.
I mean, a short-term marriage. It's not a great probably way to put that.
Destined for separation.
I mean, you're entering into a relationship for the next, call it 3 to 7 years, kind of minimum. You very much need to like each other, especially in it for the long haul. So, what are some of the other things that like entrepreneurs should be asking themselves when looking at a VC firm or a 500? Why should I join them?
Okay, well, for 500, it's because 500 is awesome.
Well, obviously. Why are you here on the show?
But no, for founders, if they're asking themselves, what it kind of falls in with the team discussion, what gaps need to be filled. Obviously, there's the capital piece, and they need investment. But if this is a venture capital fund that provides mentorship as well, and they need that, then go after that type of fund, or go after that type of capital. If you're incredibly verticalized and you're in the medtech space, don't go after anybody else except for those folks in the medtech place, or maybe an agnostic firm such as 500. You need to find someone who is going to be a partner in this journey that you're going to go on, and you need to do research and maybe create some sort of chart. I'm sure you could find these online as well, with different funds, what verticals they focus in, what type of interaction they have with founders. Talk to other founders as well, because they're going to be your best friends in all of this, and what experiences they've had with Fund X and Fund Y and Fund G, and if they were founder friendly, did they try to get over on them in terms of the cap table negotiations, taking too much equity or something, or too little equity, so many things. So yeah, definitely do your research, talk to other founders, get involved in networking events and places like that where you can just get insider information from. Go to an event that someone like 500 would put on. Just try to do your research and be prepared. It goes back to being prepared for your pitch, being prepared for your investor meeting, being prepared to interrogate yourself in the mirror about your idea or whatever. You just need to be prepared when you're trying to find that VC, but do your research.
Awesome. Any final thoughts, any final advice that you would want to impart onto entrepreneurs or investors that are, or potential investors that are looking to get into VC?
For investors, understand that the failure rate, it is, I mentioned this earlier, such a sexy industry and everybody wants to do it. Not everybody can do it. A lot of people should try to do it, but know that the success rates are incredibly small. And if you want to push through, raise your first fund, if you even get to that point, because finding LPs if you're an unproven investor or GP is almost impossible.
Yeah.
Know that it's going to be an uphill battle, and you're not going to have a salary for a long time, and you're not going to be able to afford things. It's kind of similar to the entrepreneurship journey, especially if you don't have a name to back you. And that's something you need to be aware of, and if you're willing to take the plunge, then go for it. And join Venture Capital Unlocked with great startups.
I don't think that a lot of entrepreneurs truly understand the grind, like, because a VC, I mean, you're very much in a sales role. You're either selling entrepreneurs to try to get the deal flow, or you're selling potential LPs. Like, you are very much the middleman. Even though everyone wants to be a VC, like, being a VC is a grind.
Yeah.
Like, it very much is. I don't think a lot of people understand.
Yeah, know that you're going to be approached on the street by people with ideas. Every event that you'll go to, even if you're not in a GP role or in an investment role, but you work for a fund, you could be the head of HR.
Yeah.
People are going to be, I have my sister's roommate's best friend has this great idea. I need to talk to her. It's wild. So be prepared for that.
Yeah, it is not, for the entrepreneurs, that is not the right time to approach people.
Yeah.
Fun fact, just ask for, find a connection, get a recommendation to them.
Yes, 100%.
It drives me nuts when when I threw West Coast Challenge last year, like, I was a dead man walking because it was me and an associate that had put this on, like a 1,000-person event, and like, I'm not even there, and people are coming up and pitching me. I'm like I can't even hear you right now. Like, I am so destroyed. Like, I don't know what you're saying. I'm just kind of here. So
This has happened at friends' weddings for me. This has happened all over the place. I'm not at work right now.
Any final pieces for the entrepreneurs out there?
Go for it.
Yeah.
Go for it. You might fail, you might succeed, but if it's your passion, then do your research, be prepared, and go for it.
Awesome. How do people reach you? How do people connect with 500?
Sure. The 500's website is 500.co. For the investor education piece, it's 500.co/education. You can take a look at all of our upcoming education programs. We also do programs for accelerator managers. So if you're thinking about starting an accelerator, definitely go to that website to check it out. And if you're interested in our seed program, everything will be on 500.co. And for Start Out, if you're interested in joining, becoming a member, learning about events, check out startout.org.
Awesome. Patrick, really appreciate you coming on the show.
Great. This has been fantastic.
Thanks again.
Thanks.